What is up, guys, and welcome to the channel. So today we're going to be talking about Zimbocash. Well, actually not Zimbocash, but I thought I'd lay a basic foundation for those who have got little to no experience or information on cryptocurrencies, and so forth. So before we talk about Zimbocash or Zash, I think it's very important for us to talk about cryptocurrency or talk about Bitcoin. So again, Bitcoin and cryptocurrencies could be foreign words, it could be foreign things to people. So let me take it way back. This is actually a recreation of a video that I saw online. So yeah, before we talk about all those things, let's talk about money. What is money? Money at its core, it's a representation of value. It represents value. So if I do some work for you, you will give me money for the value that I've given to you. So I would then use that money to get something else of value that is of value to me in the future. So throughout history, value has taken many forms, and people have used a lot of different materials and things to represent value. So cattle, grain, sheep, goats, and of course gold have all been used as a medium of exchange. However, for something to represent value, people have to believe that it is indeed valuable and will stay valuable long enough for them to redeem that value in the future. Until about 100 years ago, people trusted something to represent money. But something happened along the way that has changed our trust model from trusting something to trusting someone. Let me explain. Over time, people found it cumbersome to walk around carrying bars of gold and other forms of money. Hence, they invented the paper money. Here's how it worked. A bank or a government would offer to take possession of your gold, let's say worth $1,000, and in exchange, that bank would give you money to the tune of $1,000. Not only was this money easy to carry around, you could actually go and buy a cup of coffee for $1 without having to split your gold into 1,000 pieces. And if you wanted the gold back, you simply took the $1,000 back to the bank and redeemed it for the actual form of money, in this case the gold bars, whenever you need it. And so paper began its use as money, as an instrument of practicality and convenience. However, as time progressed, due to macroeconomic changes, the bond between the money and the gold it represented was broken. Now, to explain the path that led us to leave the gold standard is a complex one, but suffice to say, governments told their people that the government itself would be liable for the value of money. Basically, we all said, let's forget about gold and trade paper instead. So people continued to trade paper money that was backed by nothing except for the government's promise. And why did that continue to work? Well, because of trust. Even though there was no actual commodity backing money, people trusted the government, and that's how fiat money was created. Fiat is a Latin word meaning by decree, meaning the euros or the dollars or any other fiat currency for that matter only has value because the government orders it to. It's what's known as legal tender. Coins and banknotes that must be accepted or offered as a means of payment. So the value of today's money comes from a legal status given to it by a central authority, in this case, the government. So the trust model has changed from trusting something to trusting someone, in this case the government. Fiat money has two main drawbacks. Number one, it is centralized. This means there is one central authority that issues and controls it, in this case the government. Number two, it is not limited by quantity. It means the government can print as much as they want whenever needed, as much as they need whenever needed, and inflate the supply of money in the market. So now the problem with printing money is that because you're flooding the market with more money, the value of each note becomes of less value, meaning the money that you have becomes worth less. So when you see prices going up throughout the year, it's not necessarily the prices that are going up, it's the purchasing power of your money that is dropping. So now you simply need more dollars to purchase something that used to cost less. So once fiat money was in place, the move to digital money was pretty simple. We already have a central authority that issues money. Why not let that authority keep track of who owns what? Today, we mostly use credit cards, EcoCash, wire transfers, and other forms of digital money. The amount of physical money available is getting smaller with each year that passes. So with money today being digital, how does that even work? I mean, if I have a file that represents $1, what's to stop me from copying 1,000,000 times and having $1,000,000? This is called the double spend problem. The solution that banks use today is a centralized solution. They keep a ledger on their computer that keeps track of who owns what. We all trust the bank and the bank trusts their computer. And so this solution is centralized on this ledger in this computer. Whenever you're giving someone control over the supply of money, you're giving them enormous power, and this creates major issues. Number one, corruption. Power corrupts. Whenever a bank has a mandate to create money or value, they basically control the flow of value, which gives them almost unlimited power. A small example of how power corrupts can be seen in the Wells Fargo scam, where employees created millions of unauthorized bank and credit card accounts in order to inflate the bank's revenue streams without the customers even knowing about it for years. Second issue of a centralized system is mismanagement. If the central authority's interests are not in line with the people it controls, there might be a case of mismanagement of the money. For example, printing a lot of money in order to save a bank or an institution from collapsing. The problem with printing money is that it creates inflation and basically erodes the citizens' money. The last issue is control. You are basically giving control of your money to the bank or government. At any point in time, the government can decide to freeze your account and deny you access to your money. Creating an alternative to the current monetary system seemed like a lost cause, but then everything changed. In October of 2008, a document was published online by a guy calling himself Satoshi Nakamoto. The document, also called the white paper, suggested a way to create a decentralized currency called Bitcoin. This system claimed to create digital money which solved the double spend problem without the need for a central authority. At its core, Bitcoin is a transparent ledger without a centralized authority. But what does this really mean? Well, let's compare Bitcoin to the bank. So since most money right now is mostly digital, the bank manages its own ledger of transactions and balances. However, the bank's ledger is not transparent. It is stored on the bank's main computer and only the bank has access to it. Bitcoin, on the other hand, has a transparent ledger. At any point in time, I can take a peek into that ledger and see all the balances and transactions that are taking place. The only thing you cannot see is who owns these balances and who is behind each transaction. This means Bitcoin is pseudo-anonymous. Everything is transparent and trackable. You only can't tell who's sending what to who. Bitcoin is also decentralized. There's no one computer that holds the ledger. Every computer that participates in the system holds a copy of the ledger, also known as the blockchain. So if you want to take down the system or hack the ledger, you have to take down thousands of computers that also keep a copy of the ledger and are constantly updating it. Like most money today, Bitcoin is also digital. This means there's nothing physical to it. There are no actual coins. It's only transactions and balances. So why is Bitcoin such a big thing? For the first time since digital money came into existence, we now have an alternative to the current system. Bitcoin is a form of money that no bank or government can control. Bitcoin is offering a decentralized solution to money. Bitcoin has several advantages to the current monetary system. First, Bitcoin gives you complete control over your money. You and only you can access your funds. No government or bank can decide to freeze or confiscate your holdings. Bitcoin also cuts out a lot of middlemen from the process of transferring money. This means that in many cases, Bitcoin is cheaper to use than the traditional wire transfers and money orders. Also, unlike fiat currencies, Bitcoin is designed to be digital by nature. This means that you can add additional layers of programming on top of it and turn it into smart money. Today, there are several merchants that accept Bitcoin online and offline. You can book a flight or book a hotel using Bitcoin. There are even Bitcoin debit cards that allow you to pay at almost any store using your Bitcoin balance. The revolution of money began in 2009, and today we're seeing it change money as we know it. On our next video, I'm going to be talking about Zimbocash, a decentralized currency that has been developed for use in Zimbabwe on the ground, and how it can be a game changer for the people of Zimbabwe, referencing how it is closer to Bitcoin. Comment with what you'd like to know about Zimbocash, and I'll probably include it in my next video. Make sure you subscribe, hit the bell notification button so that you are notified whenever I release a new video. Alright guys, it's been real, so cheers.